Hey everyone, it's your boy Archer, and today we're going to be talking about buying versus selling. What is a market execution and what are pending orders? I'm going to be covering the 4 types of pending orders we have in the Forex market. So let's start from the basics. What is buying? Buying is simply picking one currency, usually a base currency, over a code currency, either buying or selling. That is how it's done. Well, that is how it's done in the Forex market. You're usually buying one currency over the other or selling one currency over the other. That's how we profit. Okay? So for the sake of this class, I'm going to simply talk about the DXY, which is the dollar index. Right? So let's start with buying. Market execution buy simply means I am buying with the current market price. So for instance, right here, the current market price is 92.722. If I click on market execution buy, it simply means I am buying dollar at the rate of, that is 92.722. If I click on a market execution right now, simply means I am buying the dollar index at 92.722. Similarly, if I click on a market execution sell, means I am selling the dollar index at 92.722. So how do we profit basically? If we click on a buy market execution, we're expecting the dollar to move in the upwards direction, simply. And if we're selling, we're expecting the dollar to move in the downwards direction so that we can profit from our transaction. Pretty straightforward with buying and selling with market execution order. So now our second example would be pending orders. What are pending orders? Pending orders are orders we place within the foreign exchange market, which is basically not instant. So how can I simplify it? This is not an instant market execution. This is where you're being very patient and waiting for the price to come to you. Let's take, for example, you go to a restaurant, right? What you have to do is basically take the menu, go through the menu and order the food you desire from the menu, and then it's gone to the kitchen, and after 10 or 15 minutes you have your food ready. 20 minutes in some cases you have your food ready. So basically you're placing an order. However, if you go to a fast food restaurant, it's basically instant. You want a burger right now, you want a sandwich right now, fast, it's there, 2, 3, 4, 5 minutes and you're done. Similar to market execution. However, a pending order is where we're placing pendings in the market and waiting for the price to come to us. So usually pending orders are done after some technical analysis. For more advanced traders, they combine both technical analysis and fundamental analysis in order to place their orders. So let's begin with a buy stop. Okay? Think about this like your bus ride. You're moving from point A. You're moving from point A to B, and then to your final destination, C. Pretty straightforward ride. So you're moving from point A to point B, and then from point B to point C. So let's translate this into a buy stop. Now let's assume we don't have all this area right here. Let me see if I can gray this area out. Okay, let me see if I can remove this patch out of my screen so that you can get a more hands-on experience on what I am trying to explain. Yeah, here we go. All right, exactly. To get the same, there we go. So let's assume your current market price is here. Okay, your current market price is right here. And for the sake of this example, let's just take this and say at 91.074. Let's assume your current market price is here at 91.074. Okay, example. And then you've done your technical analysis, probably compared with some fundamental analysis news, and you're expecting the dollar to get stronger. So you would place a pending order. Okay, saying, okay, I am forecasting the dollar to get stronger. Therefore, if DXY, if the dollar index gets to, let's take an example, 91.397, which is right here. If the dollar gets to 91.385, this is just an example, guys, okay? If the current market price, this is just an example, guys, okay? Let's assume this is our current candlestick and it's at 91.074. Okay, and we did our analysis and we're forecasting dollar to go higher. So I can place a pending in the market and say, if and only if DXY goes to 91.385, then only activate my order for a buy. Meaning, you're expecting the dollar index to move from this point here to this point here and activate for a buy and move to your direction. And since you're buying, which is to the upside, that is called a buy stop, meaning you're buying to the direction of the market. And if we unveil this now, so market was currently here and we placed a pending order saying once the market reaches 91.385, activate me for a buy. And in this example, since it did continue in upward momentum, meaning the market went to our favor and you profit from this transaction. If you place a buy stop and the market goes against you, then of course you're in a losing trade. So this is quite simple for a buy stop, guys. A sell stop is the same, just in reverse, right? So let me just take an example of our current market price right here, which is 92.722. Okay, so let's assume we've done an analysis, okay, and then we're forecasting that the dollar index could perhaps come down to 92.164. So what is a sell stop? A sell stop is you buying to the direction of your forecast. So a sell execution would mean sell index dollar right now at 92.722. A sell stop would mean unless and until you get to this price, let's assume here 92.522, do not activate my order. However, if the price gets to this level here, then activate my order at 92.522. And of course, like I explained before, if it moves this way to your direction, you profit from the transaction. And if it goes against you after activating your order, then you're going to be in a negative position. So you make sure you have your stop loss in place. If you don't know what a stop loss is, we're going to cover the basics of what a stop loss is in another tutorial. So pretty straightforward, guys. Let's assume the market price is currently here. However, we're not ready to sell yet. We're confirming. We're waiting for other confirmations, which after our technical analysis or expecting our fundamental analysis, we want the market to activate our order only if it gets to 92.522 and move towards our potential take profit area. That is a sell stop pending order. So it's basically just the opposite of a buy stop, right? So great. Now that we've covered these four, so basically we know what a market execution buy is. We know what a market execution sell is, and we've covered what is a buy stop and sell stop. Amazing. So now let's talk about buy limit and sell limit. They're still basic, guys. Don't get scared, don't get confused. We're going to explain this in a minute. Easy as possible. Okay? So let me take out all this. So, let's begin with the buy limit. A buy limit is simply where you have your current market price placed somewhere here, okay? But after your analysis, you feel you can get it at a cheaper price. Therefore, you wait for the market to come lower before you purchase. And then once it gets here and activates your order, you expect it to go back to the upside direction. Right? So let me just give you an example of you wanting to buy like beautiful Zara shoes or Gucci shoes or Nike shoes or Adidas, whatever your selection is. And you've been eyeing this really nice pair for a long time, but it's kind of above your budget, right? So what do? You just wait for the sale season to come, and hopefully it would be on sales and you save yourself like $30 or $40, right? So it's the same thing for a buy limit, right? So let's take a live example here. A buy limit would be exactly like this. So let's assume the market is here at 92.722. However, after our analysis, okay, we have a strong notch that the dollar index is going to become stronger in the future. However, we don't want to buy the dollar index right now, which would be a market execution. And we don't want to buy it right here, which is 92.914. That would be a buy stop. Rather, we want to be patient and wait for the dollar index to drop down to this level here, which is 92.153. In case you're confused about where I'm getting these numbers from, this is basically just a tutorial, guys. I'm reading them off right here. Okay, good. So let's cover this again. Let's assume we've done our technical analysis. Probably we're relying on some fundamentals, and we came to a forecast that, okay, we're expecting the dollar index to gain strength over the next coming days, next coming weeks, next coming months. Okay? And we want to buy the dollar index because we believe that it's going to gain more strength in the future, and we're going to profit from that. However, I don't think buying the dollar index at 92.722 is a good price. That would be a market execution. And I don't want to even buy it higher by saying, let me wait for the price to get to 92.915. That would be a buy stop, right? Rather, I want to wait for the dollar index to come down to this level here, which is 92.153, and then move for a buy to my direction. Now, if the dollar index buy limit activates here and starts going this way, then we're being in the negative, because a buy limit means we're buying at this limit here and we're expecting the market to go back to our direction, which is the upside direction. I hope this is clear. It's really simple and straightforward. So what we're doing is that if the current market price is here, we basically want to wait for this market somewhere down here. Let me pick this tool, quite easier. We want the market to come down here, activate our buy order, and then move to the upside. This is called a buy limit. Okay? So let me make this easier. So this would be a buy limit. Excellent. Now, if we pick this, let's assume this is the current market price here, and we want the market to move to this direction here and then continue downwards. This, my friends, of course, as covered before, would be a sell stop. Clear, right? Now, what is a sell limit? As easy as the rest, it's just the opposite of buy limit. So let's assume the market is currently here. And we're forecasting that in the future, the dollar index is going to drop from 91.895 to a lower price or lower value. Okay? However, we don't want to sell the dollar index at 91.909. Rather, we want to wait for the price to come a bit higher and then sell off the dollar index. Okay? This would be a sell limit. So we're expecting price to move from here to the upside, activate our sell, and then move downwards to this place. Okay, just do this again. All right. So this would be a sell limit. So basically the market is moving up to a higher price for more value and then selling off to our direction. So if I'm going to just take this here as a market price, let's assume this here is a market price. Market execution would be selling at this price right here, right now. This here is your current price. And let's make this yellow. Okay, so let's assume this is your current price. Market execution buy means you're buying at this price right now. Market execution sell meaning you're buying at this price right now. Okay. A buy stop means the price is moving from here to a higher price and then moving to the upside direction from that point onwards. This would be a buy stop. Buy stop. There we go. Right? Similarly, this is your current price. Sell stop would mean price is moving from here to a price somewhere below your current price and then moving to the downward direction. This here is a sell stop. Pretty straightforward, right? Hope this makes it easier for you guys after today's class. Amazing, amazing. All right. Now, what is the sell limit? This is your current price here. Okay. You want price to move a bit higher and then going to your direction. This here is a sell limit. Great. A buy limit is opposite of the sell limit. So let's assume this here is your current market price. A buy limit would mean you want price to come a bit lower, then moving to your direction. There you go, buy limit. So I hope you guys found clarity in what we just did today. Please, if you have any questions, you can drop a comment below. Thank you guys, it's your boy Archer. Please subscribe. Looking forward to doing this again.